Hello and welcome to another trading day right here in Lagos, Nigeria on Business Incorporated, coming to you live from Channels HQ in Lagos. Here's what's coming up in the next 55 minutes. Financial services company Alianza highlights key risks to businesses in 2024. And the Federal Inland Revenue Service exceeds its 2023 revenue targets by 107%. Plus, Zambia's inflation rate nears a two-year high as the kwacha slides. And it's great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda today. We see the Federal Inland Revenue Service has exceeded its 2023 revenue target by 107% there. Massive 12.37 trillion naira jump there. Collected a total of 12.3 trillion from taxpayers last year. According to a director on the FIRS, the amount, which is 816 billion naira higher than the initial projection, represents a 67.91% jump from previous year's target and from 56.9% rise. That's from the actual revenue. A breakdown of the revenue scorecard shows that the oil sector generated 3.17 trillion naira, about 25%, while the non-oil sector contributed a majority of the total revenue generation by 74.4%, about 9.92 trillion there, 74% jump. Meanwhile, the tax agency says it has now accounted for about 70% of contributions to the Federation account and is set out to achieve 19.41 trillion naira as its tax revenue target. That's for this year, 2024. So be watching out if they actually exceed that, definitely at the end of the year. Let's get a check on grains market. Now we see Chicago corn futures, that rose today, hovering near highest point in a fortnight, propelled by concerns surrounding reduced production in Brazil. Simultaneously, we see soybeans saw a slight increase, while wheat, that surged to its peak in over 2 weeks, driven by investors engaging in short covering that led to gains in the agricultural commodities. It's also worth noting that the corn market had hit a 3-year low just last week. Soybean SB1 registered receipt wheat there up 0.9%, $6.16 a bushel. That's what we're seeing for wheat. So looking at all the commodities there, most of them have reached their highest level since January 8th. That's about $6.17 per bushel. That's talking about wheat. To the dynamics of the market now, there's looming concerns of stressful heat forecasted for crop areas in Argentina, a region that had been anticipating a substantial harvest. So that's how the grain markets are looking right now. Let's get a quick check now on the global oil market. Oil prices rose today following the release of data indicating a more significant than anticipated decrease in U.S. crude stockpiles last week. The move was further bolstered by the Chinese central bank's decision to cut the bank's reserve ratio, fostering optimism for additional stimulus measures and an economic rebound. So we see Brent there at about 1.2%, $81.01 a barrel. And you see U.S. WTI crude futures, that's up about 1.4%, $76.12 a barrel. So we're seeing an uptick now. Definitely, we know the market is quite volatile at this time. We're seeing stockpiles experience a substantial decline of about 9.2 million barrels last week, surpassing the 2.2 million trillion barrels draw indicated by analysts. This drawdown was attributed to a sharp reduction in U.S. crude imports, influenced by winter weather, closures of refineries, and decreased road travel at this time. So that's what we're seeing for the oil market. Let's get a check now, see what's happening here. We have some stories coming out of Nigeria now. We're seeing forecasts now, major forums there forecasting what to expect, for the Nigerian economy, even though we see those headwinds are still there. So that's one is coming from the Nigeria Economic Summit Group. They released their macroeconomic outlook for 2024 with an emphasis on the need for government to adopt an economic transformation agenda to drive sustained growth and Development. In its newly released Outlook report titled Economic Transformation Roadmap, Medium-Term Policy Priorities, that was launched in Lagos. The economic think tank group projects that Nigeria's real GDP will grow at 3.50% this year, citing the anticipated rebound of the country's oil sector. Take a listen.
We need just 1 year.
Doesn't look like a large meeting since some of the participants are joining virtually, but that does not belittle the importance of the subject matter. The Nigerian Economic Summit Group is sharing observations on the performance of the economy in 2023, but it is focusing more on how best to navigate policies and implementation for a better 2024 in the stabilization phase with a projection of 3.5% GDP growth.
This phase then talks about achieving growth, not just about growth, but actualizing our natural resources to drive our collective purpose as a nation. And the first part to start with is understanding our natural capital. We are blessed tremendously with our natural capital. If we can achieve this, it will impact our GDP size, it will impact our economic structure, it will impact our employment and our poverty and inequality situations.
Brilliant ideas do not make impact, and the Chief Executive Officer is aware of that.
So the cyclic nature of NESG's activities, the Outlook report, at the beginning of the year, then we jump into the reform execution and monitoring with government, then we show up in October at the summit to signal where the country is, what we won on, what we lost on. Then we jump back into, again, reform action and execution. That cyclic process, whilst it looks mundane, is part of how you build national conversations that change a country over a generation or more.
And so, for the use of the government and private sector and economists,
these and more are some of the content in the NESG 2024 Macroeconomic Outlook, which also has the Economic Transformation.
That's it. Thank you, sir.
How many persons do we need?
Well, now to our first conversation. Well, in doing business, it's necessary to identify risk or opportunities that can serve as either a tailwind or headwinds for your business. Well, Alianza Commercial recently launched its Alianza Risk Barometer for 2024. Let's get a sense of what to expect now. Joining us is Ikechukwu Makugo, Group Head, Corporate Sales, Allianz Nigeria. Join us right here in the studio. Great to have you.
Thank you, Ladi.
Yeah.
Nice to be here.
I know some people like risks, because somehow, risk has a way of giving you, more reward, depending on, what you're investing in, at this time. And looking at your report, we see for the global space now, we see the most important business risk of 2024, cyber incidents, top the list, but with about 36%. Business interruption, we're seeing that about 31%. Natural catastrophes, 26%. So talk to me now, before we get into 2024,
Okay.
Talk to me about 2023.
Okay.
The risks that actually manifested, because I know you had a projection, definitely, when we're coming into 2023. So talk to me about the risks that manifested in 2023.
Okay. So thank you, Ladi, for having me once again. So looking at the risk for 2023, it's not so much different from what you are currently saying. Cyber has been dominating the global risk for some years now. So same projection we had in 2023 was cyber going to lead the pack, and that happened. Second on the list was business interruption. So those two risks have dominated the global landscape. I mean, if you notice from the period of the pandemic, from COVID era, we moved on from COVID, people recovered a bit. After recovery, we had a Russia-Ukraine war in Europe, which led to energy crisis. After that, we had some wars going on around the world. So those risks, we've seen them manifest even in this year. In Nigeria, I mean, last year, we had projected that political risk was going to be on the increase, and that's because of the election we were going to witness 2023, and that risk went up to number 2 in Nigeria. Even though we had the macroeconomic risk, which was speaking to inflation that had been on the upward rise for some time, and we saw that manifest in Nigeria last year. However, things have changed in 2024. We've come up with new projections for 2024 based on what we've seen the market do and how the global risk has responded so far.
And talking about, the 2023 being an election year, how much of those risks, how much did they impact, businesses, in 2023, knowing fully well that, fine, a couple of days we had to, instead of getting the results at a particular time, we had issues, with collating and all of that. How much of that, played into businesses, maybe some taking some hits in profit?
Okay, that risk was major, and we witnessed some changes. So many people were scared of what was going to happen, the outcome of the elections. Many people fled the country at some point. Businesses stalled. They were not able to take off projects. So there were many projects that were abandoned. People were waiting to see the outcome of the election. Now, surprisingly for us in Nigeria, we expected to witness violence. We expected to witness some form of uproar, business disruption. However, we were grateful for the way the opposition party took the results after the Supreme Court judgment. That helped to douse the tension in the country. So yes, political risk was very evident in our country last year, but we're able to see that come pretty low going into 2024.
Yeah, and definitely, talking about violence, we're seeing the sad situation, in Plateau. We're seeing people, get killed at this point. And definitely, insecurity anywhere is a problem, everywhere. How are you guys looking at, this situation in Nigeria? Okay,
so in terms of insecurity, we believe that the government needs to attack the root cause of insecurity. Most times, it's as a result of inequality. High unemployment rate, lack of access to basic amenities, and all of that. You might not witness a full-blown war, but you would witness cases like you mentioned in Plateau, the killings in Abuja, the kidnapping of certain people and certain individuals. So you need to address those root causes. It's more of inequality that is bringing about these insecurity issues. So once government is able to address these issues, we would see that spiral downwards.
Because definitely you can't do business in an insecure area, because at the end of the day, the customers are going to be afraid to come by. The buyers, the sellers can't even sell. Absolutely. So insecurity definitely a big problem.
It is.
At this time. But talk to me about the biggest risks now. You say break down the cyber events, at this point, because it's becoming quite a problem right now. Even in the WhatsApp group, you see cases where you get a code, or somebody calls you up and say, you know what, you're supposed to join a particular meeting. We're going to send you a code to register you. Then next thing you see a code, and you might just feel it's coming from a legit group that you are part of. And the next thing, they've taken over your WhatsApp. Yeah. It is becoming a serious issue. Talk to me about this cyber event.
So when you look at cyber, towards the end of the 20th century, something manifested in the global world, and we were so excited about it. That was the rise of the internet, and people were able to connect with other team and pairs around the world. So the internet brought about some form of connectivity with people. Now, it didn't stop at the internet. Going into the year 2020, we then saw a new rise in technology, that's cloud computing, where you then have a form of remote working. You can have your data stored up in the cloud. Now, it was from that cloud computing we then started witnessing cyber breaches, because companies started migrating their data centers from the traditional warehouses that they had to more remote warehouses, that's in the data centers in the cloud. Now, people took advantage of those data opportunities. People took advantage of those opportunities by trying to breach the data companies hold. Now, many companies have access to third-party data. You get third-party data, either people who purchase your goods, you retrieve information from them, you take their biometrics, and you have access to those information. Now, people want to gain entry to that database that you have, and that's what is bringing about the cyber risk. Now, it happens on a small scale, it happens on a very large scale. Some cyber attacks could be state-sponsored. right? You could have some state-sponsored cyber attacks into different governments, different multinationals to see how they can breach data. Now, those risks lead to large losses, particularly for major companies. They reel out millions of dollars trying to recover. That affects their whole operation. And many of them, it affects their reputation, because people will no longer feel comfortable or trust them to secure their data. People are worried about it. Cyber is a major risk, not just only in the globe, everywhere, every continent. The report shows it in every continent. Africa is also affected, Europe is affected, Asia is affected, and that's because we're connected. And that is a risk that we will keep seeing. Now, people think that cyber cannot be solved. Yes, it can be solved, but you need to invest in it. You need to invest in training your people, your employees. You need to invest in security governance. You need to make a lot of investment in cyber security. Otherwise, you'll keep allowing malwares. So sometimes some employees see some links, or some people see some links, phishing mails. You don't know where those mails are coming from. You don't even know how trustworthy those emails are, and you click it. By clicking those emails or by clicking those links, you are exposing your company or whatever security device you've put in place to those kind of attacks. So we need to deal with cyber risks, because the losses that come out of cyber risks are very large. They are very large. It could put a company down. And insurance companies are also affected, because some companies have been asking for cyber protection. How do they protect themselves against cyber risk? In the developed part of the world, yes, you have some level of protection over there. Whereas in Africa or in Nigeria, you don't see that level of protection readily available. You need to reach out to foreign partners to get that kind of support. But we need to understand that cyber is real. It's something that is evolving. We're moving from a physical workplace to a much more virtual reality. Now, in 2021, Facebook rebranded to Meta. Now, they realized that from the pandemic, COVID, they saw the trend that was going to happen. People were going to believe more in virtual reality, so to speak. The gamers know about virtual reality a lot. So people are transiting from physical reality to virtual reality. And that was why Facebook rebranded. And people need to understand that this risk are evolving. The longer we play catch up in Nigeria, we're going to.
So even if it's virtual or physical, there's still risk right there. And definitely, talking about companies at this time. We have the big companies, you have the smaller companies, but affordability seems to be an issue, because it costs you money to actually protect yourself, from this cyber risk. So are there some kind of affordable, options, for, smaller companies, smaller businesses, trying to, make some profits?
When it comes to risk, every company can adopt 3 different approaches. You could choose to avoid some risk. In avoiding this risk, it could come at a cost. It costs you.
Maybe you just say you want to stay off the internet.
You want to stay off it, exactly, but it's come at a cost. So the opportunity cost of staying off the internet could be you're losing market expansion. You're losing a growing market that you can tap and invest in and build your returns. You're losing opportunity to develop a market. So you could do that, but again, there's a cost to it. Then the second option, you could choose to manage those risks that you can. Right, as little as you can. Maybe you've done your analysis about the country you operate in, your personal analysis, your portfolio analysis, then your SWOT analysis. You could choose to then say, oh, this is the risk I'm exposed to. This is how I want to manage so that I can ensure business continuity. Right? I want to stay in business for this long, so I will do it this way or I'll do it that way. Now, the third part you could do, which I feel is more affordable and better, is the risk transfer. Now, not every risk you can manage, not every risk you can avoid, but some risk you can transfer. And that's where you transfer to specialist insurance company like Alianza, where we then take care of your risk, we manage those risks for you, and we protect you in terms of indemnity, where a claim will then happen in the future, we are then able to indemnify you against such losses. So we always advise employers, we always advise business leaders to invest in risk and transfer so that they are able to mitigate whatever loss they would ever face in the future.
Right, because doing business is risky. But very quickly now, talk to me, we've seen the major risks coming in 2024. Talk to me about ways companies can actually hedge at this point, because the risk will always be there, but you must do business.
You must do business. So solutions for businesses, we've always said, is that businesses need to prepare, you need to plan, you need to have multiple scenario planning. right? You need to understand your base case, what is the minimum you are able to allow, what is your worst case scenario, and what is your best case scenario planning. So you need to plan for any eventuality. You must understand that you are in business to succeed, to make profit. So you must plan for all those eventualities. Now, in Nigeria, we are seeing a lot of reforms happening. The government wants to be aggressive about the economy. They want to grow the economy. The banks will sometimes recap. The power sector would also retain some form of recapitalization somehow. So businesses need to invest in strengthening their resilience. You must prepare for those tough times. We know that we're going to experience a tough year in Nigeria because some tough decisions will have to be made. We're trying to rebuild the economy, so you need to prepare, brace yourself for those periods.
We're already feeling the impact of some of these tough decisions.
Exactly.
In 2020, we're feeling it in our pockets. Definitely. Thank you so much for coming on. Ikechukwu Okugo, Group Head Corporate Sales, Allianz Nigeria. Thank you so much.
Thank you so much, Laddie.
All right, so we see the governor of the Central Bank of Nigeria, Dr. Olayemi Cardoso, believes the Naira is currently undervalued. Dr. Cardoso was speaking virtually at the launch of the Nigeria Economic Summit Group Macroeconomic Outlook, where he shared the regulator's optimistic projection for the country in 2024. Let's take a listen now.
Foremost among the factors contributing to this positive outlook is the expectation of improved crude oil prices and production, highlighting the crucial role the oil industry is expected to play in driving economic growth. Inflationary pressures are expected to decline in 2024 due to the CBN's inflation targeting policy, which aims to rein in inflation to 21.4%. This will be aided by improved agricultural productivity and the easing of global supply chain pressures. We believe that the Naira is currently undervalued, and coupled with coordinated measures on the fiscal side, we will expedite genuine price discovery in the near term. We are implementing a comprehensive strategy to improve liquidity in our FX markets in the short, medium, and long term. Our focus is on addressing fundamental issues that have hindered the effective operation of our markets over the years.
Welcome back. Well, let's head straight to the markets now. Looking at global market, the local bourse, and the fixed income market, we have Anita Edet with the details. Great to have you, Anita. I'm sure you heard what the central bank governor said there. The Naira is undervalued.
Well, I think almost everybody knows that that the country's local currency, that's the Naira, just like you rightly mentioned, it is completely undervalued.
So undervalued.
Exactly. Especially when you go to the market, if you hold, I don't know what amount you have in your pocket, but if you hold, let me give an instance. You hold 100,000, you go to a supermarket and you want to purchase something.
It's gone. It's all gone.
I'm telling you,
in a few minutes.
You take a look at your pocket and say, what did I just buy?
And you look at the basket and not much.
Groceries,
this is essential.
Particularly food items.
Right.
I've not even talked about electronics or other consumables, particularly groceries.
Right.
Laddie, I tell you, I just tried to get some parfait last time. The amount in which it was previously. Right now, I don't think
when I see
continue.
the prices of phones, take for instance, it's so painful to see, some of these prices, because normally, there was a range, we're used to when you're trying to buy a new phone, about 200, 300K, but now
in the millions.
It's in the millions. Yes. It's ridiculous.
But ironically, Nigeria has their own phone, which is called AfriOne, but I don't think that's in the market.
Right.
And all of these phones that...
Maybe Africa should start making phones.
Africa is making, but are we patronizing them? That's the big question.
And maybe let's try and compete with the Apples and Samsungs.
Well, let's start first with the manufacturing and the local sourcing. Then maybe we can talk about the competition.
Exactly.
But before that, let's talk about the market at intraday. Look at your board here. Yesterday, remember, I was talking about the NSC or the NGX All-Share Index at 100,000, but take a look at it. It's becoming more like a cliche to say Nigerian stock market is breaking new frontiers, making new highs, and making new milestones. Now, this time, it's 101,714.69 points. And then at intraday, up by 0.14%. Now, year to date, the market is about some 35.8% as at yesterday, but that figure has been raised. And then don't forget that last year we closed the year 2023 up by 45.9%. So the total year to date, which is month to date, at 35.8%, is almost the entire of what we had in just 1 year. We being gained just within 3 weeks of January, and we talked about that on our News at 10 Business News yesterday. So far, the market in Naira terms has gained nearly about 4 trillion Naira. And then, of course, the billionaires list and the millionaires list on the NGX is really improving, increasing, and quite impressive. And all this is thanks to the local investors. Now, what about the foreign investors? They're also looking at this market, and of course, with caution, because this, at some point, is scary, at the same time, impressive. Call it impressively scary. Now, let's look over to the South African market. It was up by 0.4%. And also for the Egyptian Stock Exchange, also up. Positive sentiment at the close at intraday trading for Thursday. But for Wednesday, the Kenya Stock Exchange had a pullback 0.51%. Now, let's talk more about the stock markets. And this time, we're focusing more about the intraday movement. If this 100K is moving forward, or maybe making a pullback, especially when so many activities are going on. So let's talk to Nathaniel Disu, a research analyst at Affirvest Consulting, to give us more details about this market. Thank you for joining us, Nathaniel.
Hello, thank you for having me.
Okay.
Good afternoon.
So it's great to have you on the show. I have quite a number of questions for you, but I don't know if time would permit. But first, let's start with this bullish sentiment. I know some people have never seen this level before. I don't know if you've seen it before, but tell me more about this. What is driving, besides the bellwethers, the industrial bellwethers, such as the Dangote cement and the Bois cement? We had 35 gainers yesterday and 30 losers yesterday, and there are also pullbacks on some bank stocks. But what actually is driving this at the moment?
Okay, thank you very much. So we've seen the equity market pick up from where it stopped in 2023, and as we all know, the NGX ASI ended the year 2023 at about 45.9%, and also we noted that one of the major drivers of the equity market last year were policy reforms by the new administration. We could see policy reforms just such as the fuel subsidy removal and also the FX reevaluation, and that gave more interest to investors. And moving on into 2024, we saw the year start with bullish sentiment in the banking sectors. Remember in November that the central bank governor gave an hint of the expected bank recapitalization exercise. So we've been seeing investors kind of prepare for that exercise and to gather momentum, and that's why we've been seeing buying interest in the banking sector. And also last week we saw some interest in the industrial goods sector, and that's particularly interesting because last year the industrial goods sectors were not among the best performing sectors. They gained less than 50%. And that was due to some impact of the FX revaluation. We saw the banks profit from that policy, but the industrial goods sector didn't really benefit from that policy. So this year we have seen institutional investors get in that sector, and one of the basis for that is due to the Africa Free Trade Agreement, whereby businesses that are operational in other African countries, they would have access to more markets. And also back home in Nigeria, we see the capital budget of the new administration for 2023. We could see capital expenditure about 10 trillion naira, which is like all-time high. We've not seen that budget before for capital. So there's expected to be some improvements in that sector. We expected to see some capital movements like in the road infrastructure and also other infrastructure. And also, another thing that is driving the NGX at this moment is the expected full year earnings that is going to come up, and also dividends declaration. We saw many companies declare good financial results in 9 months last year. So the expected full year numbers is expected to be high also, and that's why we've seen some buying interest in the NGX at the moment.
Okay, Nathaniel, I think we'll just we just have to hold it there because we still have other markets to talk about. But we really do appreciate your time and that analysis, that information that you've given to our viewers, particularly the investors who are watching our program at the moment. So thank you so much for your time.
Thank you very much.
That was Nathaniel Disu, research analyst at Afrinvest. Details about the stock market. Now, let's look at the other side of the other markets in other regions. For the Middle East, we saw negative sentiments across board there, particularly on the Abu Dhabi and the Dubai. Both are in the United Arab Emirates, so they had a pullback. Yesterday, we saw the Dubai FM being in the green, while the Abu Dhabi was in the red, still sustaining that negative sentiment from the previous session. Now the other side of the market, the Arab world's biggest market, that's the Saudi Stock Exchange. The Tadawul was down by 0.13% at intraday, while the Qatari Stock Exchange is in the red, 0.25%. But already, analysts are saying that GCC stocks, that's Gulf Cooperation Council, it's a country made of about 6 countries, Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the United Arab Emirates. They're projecting that these countries will sustain strong growth trajectory this year, led by Saudi Arabia and the UAE, and that's on the back of strong macroeconomic fundamentals, vibrant investment landscape, as well as a cooling inflation globally and expectations of rate cuts. So we'll be keeping our eyes on that market. Now let's move over to the US markets. The stock futures there, we saw them rising moderately, and that's because at the same time, investors are they're getting ready for the US markets as the world's biggest stock markets, the world's biggest economies. Q4 GDP report, which is expected to come at about 2%. Seasonally adjusted, and that will reflect a slowdown from a 4.9%, which they are expecting. So, but for the futures, it's in the green, which the market will be opening by 2:30 Nigerian time. So for the Dow Jones Industrial Average, the futures is up by 0.24% at about 0.25% high and up. And then the S&P 500, we expected just a tad, 0.8%, while for the Nasdaq is up by 0.03%. Now, for the Asian market, which is the last market on our radar at the moment, the regional indexes, they're already hours ahead of us, about 8 hours, some of them. So they closed Thursday's trading session positive, and that's because China had announced a monetary policy measure, for the banks. So many of the indexes there, they're reacting to that, as well as some other news which has affected the regional markets for Nikkei, which is for the Japanese market, the Kospi for the South Korean market, the Hong Kong Hang Seng Index, which has been overtaken by India as the 4th largest, and for the Australia's ASX 100 and the other markets, which is the Chinese market. So, Ladi, that's what I can give you about the markets across the region, 4 regions as we talked about.
I'm sure investors globally will be looking out for the US GDP data
exactly
for the 4th quarter of 2023. Definitely that will bring some kind of volatility, to the market, but we'll keep tracking that. Thank you so much for the details. All right, so now let's head on to the UK now. We have Juliana joining us from our London studio. Great to have you, Juliana. So we see a leading think tank, Institute for Fiscal Studies, that's the IFS, and they're saying the next UK government faces the worst fiscal inheritance in 70 years. That's quite a grim projection.
It is a grim projection. Good afternoon, Laddie. Really, as well, not a great headline for Rishi Sunak, the Prime Minister, who has had a pretty difficult week. There was a failed coup attempt earlier this week, as well as, of course, him losing that vote on Rwanda in the House of Commons. And this is all about the ballot, which is coming up in the autumn time, we believe. All eyes are on the general election and the Labour Party, who were beating the Conservative Party in the polls. And that really is the subject of the data released, or should we say the warning released by the Institute for Fiscal Studies early this morning. As you said, they are a leading think tank. They are an independent economic researcher. And they've basically said that, look, be very, very careful about any promises or pledges made during the campaign about tax cuts, because quite frankly, we cannot afford them. And that's why they are suggesting that whoever does inherit the keys to number 10 Downing Street are going to be having serious fiscal issues. And I think this again goes back to the Prime Minister really doing whatever he can to win back the affection from Tory supporters who are looking, according to the polls, to back the Labour Party. And one of the ways himself and the Chancellor of the Exchequer, Jeremy Hunt, are trying to win support is by suggesting that perhaps there could be tax cuts when we get the last fiscal statement of this administration, which is going to come on the 6th of March. And now, earlier this week, Laddie, if you cast your minds back to Monday, we were talking about government debt. We know that they borrowed much less in December, and they are receiving a significant upboost to their tax receipts, because corporation tax, just as one of them, has increased from 19 to 25%. So the coffers are looking quite healthy at the moment, and there are suggestions that perhaps national insurance tax could be cut or income tax could be cut. But if they are cut, what services are you going to be cutting to pay for that? This was an issue we had with Liz Truss and Trussonomics, which is why she was ousted from number 10 after just 6 weeks. Are we heading that way with Jeremy Hunt? There have already been suggestions this week, Laddie, that perhaps the Chancellor may not even be Chancellor when we go towards the next general election. So lots of food for thought for Rishi Sunak, and certainly for Sir Keir Starmer, the leader of the Labour opposition party, who is being described as the Prime Minister in waiting. Yeah, UK politics, quite volatile at this point. 1 minute you're in, the next you're out, basically. What we see the investors are looking at a lot right now. We're expecting ECB rate decision in Europe. Also expecting the US GDP data for the fourth quarter of 2023. How are investors seeing all of these expectations? Yeah, well, earnings season and announcement season is in full swing. And I think the most important announcement of the day, of course, is going to be coming from Frankfurt, where in just under an hour's time, President Christine Lagarde will give an update to the ECB announcement, which we're expecting in about 40 minutes, basically deciding whether or not it is going to be cheaper or much more costly to borrow. Now, for the past two ECB sittings, they have kept rates steady at 4%. And I think if you look across the board, including from Bloomberg to JP Morgan and others, they're all expecting rates in the European Central Bank to remain at 4%. So I think that's already been tied into the markets. The FTSE, the UK Blue Chip Index, it dipped slightly on anticipation of what is going to happen. So really, it's not about the rates now. It is about what Christine Lagarde is going to say. Is there going to be a push, or shall we say a pull down on interest rates in the spring? That's what she hinted at when she was in Davos last week. Took a few people by surprise, because there are headwinds that are preventing the European Central Bank governor, as well as central bankers around the world, from reducing high interest rates. And that is wage growth. Wage growth, particularly in the UK, is on the up. We know that people are demanding more wages. In Europe, we know, of course, if you earn more, you spend more, demand goes up, inflation remains, elevated or stagnant. And that is the issue. Although we are starting to see inflation falling, we're not out of the woods just yet. So what Christine Lagarde has to say in an hour's time is going to be very, very important. And of course, all global markets are going to react to that. Yeah, investors are definitely not going to be looking at just what's done, but also what's going to be said right there for the rate decision. But how are the markets faring in the UK? Not bad, actually. I told you they opened slightly down because of the anxiety around that ECB rate decision. But there was some good news, actually. We got some data, I believe it was from the Society of Motor Manufacturers and Traders, saying that UK car production in 2023 was up 17% year on year. In fact, I believe we produced over 1 million cars, which is good because, of course, we're not the production hub of vehicles in the world. So the fact that we've seen a boost that we haven't witnessed since pre-pandemic times of 2019, 2019 is good, and that's cheered investors at intraday. The all-share, Laddie, is up by 0.01%, just a smidgen up there. The FTSE 100 is up by 0.04%. The domestic market, the FTSE 250, that is down by 0.18% at intraday. In the currencies market, the British pound is currently trading up against the US dollar by 0.10%, though down against the euro by 0.02%, but up against the Japanese yen at intraday by 0.12%, Laddie.
Right, I guess boosted in production, definitely good news for the UK then, that car market. Thank you so much for the update, Juliana.
Thank you.
All right, let's get a check on what's happening in Europe now. See, for European markets, whether it's banking, industry, or retail, there's not many big businesses that are not relying on software made by the German giant, that's SAP. Now, the company has announced a major restructuring. Lars Holter from DW joins us now. So, Lars, what are you hearing about SAP?
Thanks for having me, Ladi. So SAP says they will restructure roles for 8,000 jobs to focus on growth in artificial intelligence, focusing a lot more on AI-driven business areas. The company will spend 2 billion euros on the program to either retrain employees with AI skills or to replace them through voluntary redundancy programs. Now, looking back a bit, SAP has already started experimenting with OpenAI's ChatGPT as soon as the so-called Gen AI, that is generative AI technology, as soon as that started gaining traction. And the company has announced plans to embed it in its products early last year. The company now expects Gen AI to fundamentally change its business and has pledged to invest more than $1 billion by backing AI-powered technology startups through its own investment arm. SAP is not the only company in the field, however, to do this. As a matter of fact, both Google and Microsoft are also focusing more on AI, and SAP for now has partnered with McKinsey for this AI collaboration. Expectations are high. They estimate that generative AI will enable the automation of up to 70% of business activities and in the process unlock between $2.5 and $4.5 trillion in annual economic benefits.
All right, what are the particular challenges for SAP and its partners?
I guess the biggest challenge right now is to use AI efficiently, allow AI to work its way through a company's processes, all while ensuring that the programs are absolutely secure. Now, we're not talking about AI taking over and making us mortals obsolete, but we are seeing, just by watching the news every day, a dynamic that is switching between AI progress and AI risks. Risks are mostly visible to people outside the business world, of course, in politics. Just this week, we've seen very simple AI used to fake US President Joe Biden's voice, for example, and deliver a fake message to voters to discourage them from voting in the primaries. So AI can be manipulative and deceptive, and with every opportunity comes risk. And that is true for businesses too. The more efficiency you allow and the more power you give the artificial intelligence to monitor and eventually take over certain parts of your business, the more you have to be sure that no one can abuse the system.
All right, Lars, what are you seeing in the markets?
Well, the European Central Bank is getting together in Frankfurt to discuss interest rates policy, and it is widely expected that the committee will keep rates unchanged at the current record high, and it's also likely to keep pushing back on investor bets for aggressive policy easing this spring. That is something we followed now for a while. Investors had been counting on lower interest rates for some time now, and this will likely not be the case anytime soon. Now, staying with the EU, but looking at Brussels, there's also a few new measures to protect sensitive technology from going to China. Those new measures include tougher rules on the screening of foreign direct investment and some new export controls. Now, this morning, China warned that the European Union's economic image was at stake with those new measures in place. But we've heard all that before, as the EU is working on de-risking from China and that country feeling the fallout now.
Lars Walter, thank you so much for the update right there. In Europe, I guess investors will be looking out for clues about interest rate cuts in 2024, be listening keenly to see what the ECB president says. So let's take a look at some news now in Africa. We see Zambia's annual inflation rate rose to an almost two-year high amid the ongoing depreciation of its currency, piling pressure on monetary policymakers to act when they meet next month. The Consumer Price Index jumped by 13.2% in January compared with 13.1% in the month before. The Statistician General told newsmen that the monthly inflation quickened to about 2.1%. That's the fastest pace in a year. The kwacha has weakened around 34% against the dollar since July and is among the world's worst performing currencies so far this year, despite various policy measures to halt its slide. And Saudi Arabia has acknowledged the positive investment atmosphere in South Africa, but emphasizes the need for enhancing logistics and energy supply. South Africa aims to attract investment from Saudi Arabia, specifically to help with the power crisis. The Saudi Arabia South Africa Business Council, established by Business Unity South Africa and the Saudi Chambers of Commerce. The council was created to improve two-way trade and investment relations between South Africa and the Middle Eastern economies. Our South Africa correspondent, Innocent Samosa, has more.
Saudi Arabia is South Africa's second largest trading partner in the Middle East and the largest source of imports from the region. Chairman of South Africa Saudi Business Council, Dr. Hisham Al-Amoidi, views South Africa as the gateway to Africa.
We're open for any new any ideas, any opportunities. As you know, Saudi Arabia now it's leading the GCC area. It's the biggest, in size and population and everything. You look at Saudi Arabia that it's the hub of the GCC area. We look at South Africa that it's the gateway for Africa countries. So we have a mutual interest, both of us. It's a win-win situation. We will have a website for this South African Business Council that will have all the opportunities.
However, the business visa remains a challenge.
We'll continue to increase connectivity where we can. The direct flight, the tourism visa now that's resolved. But my Saudi colleagues tell me there's still issues around business visas and work permits potentially. So we need to cover those.
Meanwhile, the business sector is optimistic about this partnership.
I think it sends a very positive message for and on behalf of business. It's certainly positive in terms of building investor confidence, and we all know that South Africa's investor confidence has been somewhat dented with the energy crisis, infrastructure, logistics, supply chain. So when you have these type of collaborations and some initial successes, it does help to restore confidence building.
South Africa is facing challenges with its oil refinery. I'm told that ongoing discussions between Saudi Arabia and South Africa are addressing this issue. Well, since 2010, bilateral investment amount to $1.6 billion between the two countries. Saudi Arabia, the biggest economy in the Middle East, is keen on industrializing its economy. On the other hand, the South African government is looking at ways to enhance its economic ties with Saudi Arabia. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
All right, thank you, Innocent. Well, let's head to other markets now. Let's talk about the crypto market. We see Bitcoin still, trying to get back in, positive territory at this point. We see that back at the $40,000 level after leaving there for a couple of days now. Ethereum is still having some downward pressure, though, at this point. BNB, that's also in the red. XRP is in the red. Cardano, Doge. But we see some movement there with Solana. Let's look at the sentiment in the market. We see it's still a neutral market from what we've seen a couple of days ago. I'm talking about the Fear Greed Index. But we see that 52 points, an improvement from about 40-something points yesterday. So it's still playing around neutral after falling back from greed and touching extreme greed at some point. Sometimes just touching extreme greed might be some kind of indicator to maybe take profit at this point. We see the top cryptocurrencies we track. We see Bitcoin, that's holding up about 0.21%. But Cardano's down, losing that 50-cent level. BNB is also under pressure right now. So it's just Bitcoin that's looking a little strong right now this afternoon. Let's bring in Gilbert Jokpata now, financial market analyst. Hello, Gilbert. Great to have you.
Yeah, greetings, Mr. Ladi. Glad to be here.
Fantastic. So we're seeing some, improvement when it comes to Bitcoin there. We see the bulls, trying to defend that 40,000 level, but there's still sell pressure. Who's selling?
Okay, I remember my last conversation I had with you last week, Friday. I talked about technical levels one should be careful of, which was the bear flag, and we're forming a double top at that point. And if you look at the market dynamics post Bitcoin ETF approval, we'll just have to explore who is behind the sell-off and what are their motivation, what are the market trends, and what are the investor strategy. But investors have sold more than 2 billion worth of Grayscale Bitcoin Trust. And you'll be surprised because Grayscale was the top advocate for the Bitcoin ETF. So why should the major sell-off come from them? But it was realized that FTX have sold over 1 billion of the Grayscale Bitcoin ETF, which explained much of the outflow. And in theory, now that the sell-off is over, we must start having some substantial cooling pressure, like the selling pressure may cool off, since FTS liquidating its bankrupt digital estate was quite a unique event in the market. At technical level, the market is still experiencing some fatigue. I may still expect some dissipation period where it may still go down and go test its recent low of about that 38, and there's still a likelihood of 37 anyway. But these are not direct levels we'll look out for because it has already touched this certain key level. But Bitcoin is having a fatigue, and then we may have a dissipation period before it gathers strength and momentum for an upward trend.
I guess when a bull market is on, sometimes it just seems unexpected. When you see a pullback. But we got that breaking news from the UK earlier. I say that they've now, set out the design for their central bank digital currency. That would be the pound on the blockchain. Talk to me about CBDCs. Are they still in?
Countries around the world are still exploring the benefit of CBDCs. With Nigeria, which is in the forefront of this, we're one of the first who issued our currency on the blockchain. And this, to an extent, I'm going to tell you, Nigeria, we are not behind in this industry. If you look at what we're doing as individual, like retail investors and crypto entrepreneurs, and also our government approach as well to the market, I understand maybe we expect more of them, but if you compare what the Nigerian government is doing compared to what we see even in first world country, I really think we are ahead of the game. But that of the UK coming into the walls of CBDC came in a response of a consultation where the finance ministry and the UK bank came together, and over 50,000 responses came up. But major issues that were raised was about privacy and control of money were their major concern. But they have already announced their future legislation of a digital pound. So I still believe that there is a whole lot of innovation and countries looking for how they could explore the benefit of CBDCs. Interesting enough, our dear country is ahead of the game.
Yeah, with the e-Naira, we also have that stable coin also coming up right here. That's the CNGN. But let's look at other issues now. Definitely, some traders might be jittery at this point, not knowing where this market is definitely going, even though some would say it's still a bull market, but the pullbacks are, definitely expected. But now we have U.S. GDP data for 2023 for the fourth quarter. That's coming out. We also have the ECB, meeting, and it's earnings season, at this point. Talk to me about which of these scenarios is a tailwind or a headwind for Bitcoin.
Okay, there are a couple of ways I'll have to look at this. First of all, it doesn't matter what the technicals or whatever in the cryptocurrency market is saying. I have always known this. A strengthening dollar is not a friend of Bitcoin. And this is because, money always moves from where it's treated less to where it's treated best. So the moment there is more interest coming in, more in the dollar, institutional investors will always see it short term as the right place to put in their assets. But there are a couple of things I have to look out for. I still believe there may be a choice of, okay, are we going to have rate cuts, just like we are expecting there'll be rate cuts, or we will still have more of a rate hike? And the answer to this will have to come with more like these data that we are expecting. Why most persons debate that the economy, the data that are coming out may not be real, is manipulated. Most persons may say, okay, these jobs are for real. I think regardless of this, if the data that are coming out is healthy, then we are going to see rate cuts. And if they are rate cuts, this will be healthy for cryptocurrency market and all risk on asset. But if the data come out is unhealthy, we may not see rate cut this time around, and this will not be a friendly activity for the cryptocurrency market. Likewise, all risk on assets.
All right. Thank you so much, Gilbert Japata, financial market analyst. Always great having your perspective.
Yeah, thanks for having me.
So I guess the major question in most investors' mind is 2024 going to be risk off or risk on? We did have all the projections in 2023. Some felt it was going to be risk off, but we saw risk assets actually do well in 2023. So it's still early days in 2024. We'll be looking out for how it all plays out. That's a wrap on the show today. Thank you for watching. You can visit channelstv.com for more updates. Also go to our YouTube channel. You can also watch this again. Thank you for watching. I'm Ladi Williams from me and the team right here at Lagos HQ. It's bye for now.